Hey, welcome back to the Mining Pod. This is the news roundup with Charlie Spears and myself of Blockspace Media. Go and subscribe to our other channels, including Bitcoin Season 2 and the Gwart Show. You can go to blockspace.media to find all our podcasts that we do. Charlie, you just did a live stream with Dylan LeClaire, so definitely going to check that one out later. As always on the news roundup, we're doing Bitcoin and Bitcoin mining news. Our friend Matt Kimmel's not here today. He's at the Oslo Freedom Forum, I believe. So, Matt, I hope you're traveling safe. Hopefully you're listening to this podcast as well. Today we have much to cover. We're going to be talking about our difficulty update, low review of mining stocks, and then we have like a slate of topics this week. Like so many different things have happened in the last 48 hours within Bitcoin, specifically the Bitcoin landscape in the US, like these listed companies. So we'll be getting to that. Names like Riot, Cleanspark, CoreWeave, Core Scientific, and much more. Just a word from our sponsors first, and then on to the show. Hey listeners, let's talk about revolutionizing your mining operation with Foreman. This isn't your average management tool. It's an all-in-one solution for reducing costs and significantly boosting your revenue. Foreman brings a cutting-edge dashboard to your fingertips, empowering you with automated energy strategies. This means not only curtailing around real-time prices, but also strategically enhancing your profit margins through demand response. It's about leveraging energy efficiency to its fullest potential. With Foreman, you get a system that scales with your business, inventory management for assets, infrastructure integration, and business intelligence. Foreman elevates the cash flow and production of your entire operation. To see how Foreman can redefine your mining operation standards, visit foreman.mn. With Foreman, you're not just managing a mining operation, you're setting a new standard in the industry.
Accelerated by Compass is the premier accelerator program for Bitcoin mining sites at any stage of development. Our managed services provide expert guidance in site procurement, construction, energy agreements, and mining operations. Compass helps clients meet timelines and expectations for operational excellence, from greenfield to retrofits and everything in between. Don't just mine, excel. Visit compassmining.io now to discover how Accelerated by Compass can power your success.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com.
Okay, let's jump into it with our difficulty update. First to start, Charlie, here is our friends from Mempool. What do we got for the week of Thursday, June 6th? What are we looking at?
Yeah, so it's pretty simple. Yesterday, we had a very modest upwards difficulty adjustment. Very modest downwards difficulty adjustment. It was kind of up to the line there. You know, I made a tweet, I think, last week, which was, 6 days into the difficulty period, which are typically 14 days, and we were targeting like a 8 to 10% upwards. Well, anyway, blocks came in. They came in a little bit slower. And we ended up with pretty much a flat difficulty adjustment, only down 0.79%. So we really just saw hash rate stop falling. I think that's the big takeaway. The hash rate capitulation, which we saw over the past month, appears, at least in difficulty terms, to have leveled out. So we'll see where this goes. I think with the price pumping to 70K as it is right now, this means everybody can stay online with the now increasingly bullish news everywhere you look across crypto, politics, everything. Like it, why would you be turning your minds off? So at this point, we'll figure out why people have turned some minds off from the news this week. But the difficulty is flat, and hash rate may resume in upward trends.
We'll actually get into this a little bit later with this CoreWeave, but JP Morgan put out an interesting note this week to its institutional clients. I got to take a look at it. And one of the things that they noted was that the fact that AI and HPC is becoming such a big thing with Bitcoin mining right now, this might actually be bullish for Bitcoin miners because there's going to be less pressure on difficulty because there's less people plugging in than previously anticipated, right? Where there was a lot of orders for units. Well, maybe people aren't going to be putting in more orders because they're going to be retrofitting for AI and HPC, which we'll be talking about with the CoreWeave and Core Scientific news. Let's go over to Bitcoin mining stocks. First of all, before we dive into all those other things, Bitcoin mining stocks went absolutely nuts this week. There was a few people that stood out. I'd say Riot stood out pretty big this week because of a short selling narrative that we will get to in a little bit, and then Core Scientific. So we're going to take a look at this chart from Y Charts. Pop up on the screen if you are just listening on the podcast network. We'll try to describe this as best as possible. So I listed a few mining stocks here. There's a lot more. There's like well over 25 at this point. I'd tried to list some of the bigger names just because we want to show like the narrative here. And I'm just going to go to a presentation view so we're able to look at everything a little bit more closely. But the one that really stood out to me is actually Galaxy Digital, which is not a pure play Bitcoin miner. But if you look at them at the end of April, their stock price plummeted pretty hard from about $15, almost $16, down to $11. Since then, it's almost completely retraced, and it's back to its previous local high as of April. Now, why is this? It's kind of hard to say exactly why. They are on the Toronto Stock Exchange and not on like any US listed exchanges, so a little more difficult to purchase there. But they are also a diversified business in terms of doing lending, market making, many other arms to their business, not just Bitcoin mining. But they are a stealthy, sneaky, strong Bitcoin miner with about 800 megawatts that they can build into. They have about 100, 150 megawatts built out right now. So that's one stock I wanted to point out. And then the other one would be Core Scientific, which has grown quite a bit this week. I think it pumped 30% on Tuesday. And a lot of the different warrants, quote unquote, from its bankruptcy over the last 2 years are getting into the place where they're going to be worth a significant amount of money. So if you were betting that Core Scientific was going to go up, you're pretty happy right now. Disclosure, I do have a very small Cores bag, very tiny. I wish it was bigger. So there's that. Besides that, a lot of the other miners are pretty flat. Like things are bullish in the sense that nothing has gone down, but they're kind of choppy, trading the same way they have for a little bit. I should mention one more stock, which is Irene. A lot of people on like the mining mafia on Twitter are pretty bullish on it. Okay, anything for mining stocks you want to mention before we jump over to talk about a few of the other stories from this week?
I mean, mining stocks took a beating earlier this year. We've talked about it on previous episodes, like, are they going to come back? And we generally agree, yeah, we would expect them to come back. They're typically a reflexive beta play to Bitcoin, and it's a way to get simple exposure to being long block space. But this is an increasingly dynamic market. You love to see it. I'll throw this next topic to you, Will, given that we're talking about public miners. We saw an interesting back and forth between two very prominent ones, Riot and Bitfarms. You've got a video, I think, to introduce this, but this one's a bit of a nail biter topic for us.
Yeah, so Riot had a lot of headlines over the last few weeks. The first one would be like Riot put out a note that they wanted to purchase Bitfarms, and then they also purchased 10% of outstanding Bitfarms stock in order to put a director on the board of Bitfarms. They said that Bitfarms is lacking some sort of leadership. They do have an open dispute right now. Bitfarms does with its former CEO. So I think Riot wants to come in here and try to purchase cheap hash rate before the bull market really takes off. It's also a nice diversification for their portfolio, right? Because Riot's like completely based in Texas, besides a few manufacturing centers here and actually in Denver. But they have the Corsicana and the Rockdale sites that they're building out of. Bitfarms is in North America, up in Canada, and then they also have some builds in South America. So it makes sense from that perspective. And then if you're bullish hash rate and bullish Bitcoin mining stocks, like now is a great time to purchase these things. Bitfarms declined that. Riot this morning put out another note that they purchased more Bitfarm stock. I think they're up to 12% of ownership. And again, they're trying to get to that point where they can be an activist investor and put someone on the board of Bitfarms and sort of start pushing that way to get more control of the company or steer it a certain way. We'll get into that maybe a little bit later, but this is more interesting, more pressing, which is a short report was issued against Riot this morning. We're going to take a listen to this video from the company that is the firm that is shorting Riot, and then let's discuss.
Yeah, I mean, I think our investment thesis is that this sector is just not going to be around in 5 years. Bitcoin mining is one of the stupidest business models we've come across in our time short selling over the past 15 years or running Carousdale. Basically, barriers to entry are zero. Companies from all over the world can buy these ASICs from China, take them next to a waterfall in South America and get much cheaper access to electricity, and be a lower cost producer. And basically, if you look at the economics behind all the Bitcoin miners in the United States, they don't make money. They just issue shares to pay themselves, a healthy stock comp and buy more ASICs and, never really generate a return. And the whole thing is sort of a scam. And we sort of published on Riot today, plan to publish on more, as this whole sector ultimately goes to zero.
Great video. So they're shorting Riot at the moment, and they're long Bitcoin to hedge that. Of course, all these Bitcoin miners are tied together. So if you're going to perform one leg of the trade, you might as well protect yourself on the other side. A little bit later in that same interview, he brings up 2 points. One is why Riot, and his answer was actually kind of funny. He just said, well, we have to start somewhere when we're shorting these Bitcoin miners. So it doesn't really seem like there was a play there. Maybe Riot's one of the more liquid ones, so they wanted to go after it. And the second thing he brought up was the environmental issue. And it was just like every single thing on like the FUD dice, right? Where there was, China banned them because it's bad for the environment. These things are just burning fossil fuels. Hilarious stuff from this guy. That being said, let's talk about the short report. Like, do you think that any of the points that he made in that video are worthwhile? I do agree that there is a lot of ATMs or a lot of offerings of these stocks. I think public miners abuse that quite a bit. Doesn't mean that retail doesn't buy it and doesn't care. So that might be part of the business model. But I think there's a pretty valid point of the short report.
What's funny is the short report does make a couple interesting points. I want to try to be a little bit of an apologist here. Like what we saw, the meta was last year and last bear market was dilute, deploy hash rate. I mean, that's a pretty strong meta. It's worked out really well for a lot of folks. So I think it's a valid point to make. I think there's also one other small thing where they point to some operational concerns for employees, which I think is a valid point. Nowhere do I see that really to be a compelling angle for shorting the stock, especially if your main narrative is going to be like it's in environmental concerns. This sector won't be around in 5 years. Like, I mean, get in line. There's a million better capitalized people who have better explanations and criticisms of that who are not shorting this stock. So I don't think it makes sense. Right now, anybody with half a brain knows that you should not be short anything in crypto. So
yeah,
like,
I think it's the biggest thing, right? Like, why are you shorting something that is obviously on trajectory for a bull market?
yeah,
Because that just fundamentally, like you're messing with the animal spirits, right? Where it's like,
exactly. Yeah.
these things are going the other way. Even if you're correct, do you want to be, what's the line from last cycle? Do you want to be right or do you want to make money? Basically, they want to be right.
I don't even know if they want to be right. Some of this stuff is pretty easily invalidated. So, I mean, I would love for them to post a position so we can liquidate them. I don't know. Maybe we can get Kerrigan Capital to debate one of the Riot folks. I think that would be an interesting one. Want to let them at least get a platform and perhaps serve that up to a willing audience.
Yeah, I mean, I put a note out to both Riot and the Carrington Capital. Is how you say it, people. So join the show. We'll get a debate going. Even if they don't want to join, I'd love to have a short seller and a long bidder. I don't know, someone long Bitcoin mining stocks on the show, just debate, because that's pretty interesting. Just one little point to refute what he's saying in terms of these companies aren't making money. There's a new report out about Riot making 7.3 million in power credits for its first month post Bitcoin mining happening. So I believe this is like May, first full month of Bitcoin mining for credits post happening. 7.3 million that's a decent amount of money, and it's credit towards whatever they want to do with their energy bills here, obviously. But I think on the balance sheet, they count as like basically cash equivalent. And that's sort of like the point against what he's saying, where he's like, hey, these Bitcoin miners can't make money. Well, they do make money. Not only do they mine Bitcoin making money, but they have tons of different ways to make money. The most popular one we're seeing in the US, especially in Texas, is as like these energy sinkholes, these energy reservoirs where they can take energy and at a moment's notice disperse it back to the grid at a higher markup if they so choose. And it's extremely profitable, very lucrative. And if you're paying attention to the ERCOT grid, where they're trying to add gigawatts, like literal gigawatts of deployment over the next few years, I don't see how a Riot or a Cypher or another Bitcoin miner that's in those spots isn't going to just be in a prime spot to earn more revenue.
I
Last
think it's
thoughts on
funny.
that?
Yeah. He also said all these companies do is they issue more shares and they go out and just buy ASICs. I'm like, that's what they should be doing.
Yeah.
So
no, it's a little clownish.
yeah.
I don't want to go too hard because hopefully they do come on the show.
Yeah.
But
That'll be I'll be more neutral going forwards.
I should be more neutral as well. I just obviously, and I think that's the issue when we try to get people on the show for debates is as people with hash rate, we're obviously ideologically in one corner.
In the competitive world of Bitcoin mining, one name stands out: Cleanspark, America's Bitcoin miner. At Cleanspark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale? We've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind Cleanspark's success at cleanspark.com.
Yeah. Let us move over from that topic and go to this Core Scientific and CoreWeave case. This is another interesting story because there's two parts to this. The first part is that Core Scientific and CoreWeave announced that they're going to do a deal earlier in the week, that they were going to do a 12-year, 200 megawatt retrofitting of Core Scientific's Dalton site, I believe, but I could be correct on that, to put in GPUs. This is supposed to make $20 billion in revenue over that 12 years. It's going to cost $300 million in infrastructure costs to retrofit these Bitcoin mines for GPUs. But CoreWeave is going to retrofit it and then use the cost of the retrofit against the future rental agreement for the site. So they inked that earlier in the week. And I think the fact that we had a big name in the AI space, CoreWeave, which was formerly an Ethereum miner, and Core Scientific, a once tread on Bitcoin miner, working together, that woke the market up to the potential for these Bitcoin miners. These Bitcoin miners have huge energy agreements already in place. They're in prime location to take advantage of what's happening with AI and HPC, and the market is now waking up to that. Since then, we've seen that the price of CoreWeave has gone up quite a bit, or Core Scientific has gone up quite a bit, and it went up even more when CoreWeave put out a note that it would purchase Core Scientific for about $1 billion, or at $5.75 a share. Core Scientific then later rejected that offer because it said it was too low. But the market's not looking at Core Scientific and being like, hey, this is a hot stock to purchase. And we mentioned that at the beginning of the show. A lot of the different warrants within the bankruptcy structure are now bidding up. And it looks like a lot of people who bet big on Core Scientific during the bankruptcy are getting towards that payday. I think those warrants take a little bit to like finish out. And there's some nuance there we won't get into. But if you look at all these different Core Scientific related securities, you're really happy if you're holding them. You're really happy. Any thoughts on CoreWeave and Core Scientific?
CoreWeave is like one of the crazy AI success stories of the past year. You kind of love to see it given their close proximity to Bitcoin mining. And now they're, they are now a part of a Bitcoin miner, I suppose, or will be if the deal goes through. So you like to see it. I see this, a year ago today, Will, we were talking about how the public mining space was not like well differentiated. It was hard to all the mining companies, they're the same. We only have one flat metric, which is hash rate and maybe efficiency. But now we can look at the different strategies, and they can almost be valued in different dimensions entirely, because a AI mining hybrid model is going to be very different than a pure Bitcoin mining demand response power markets play. Like, this is fantastic to see in the market of highly differentiated strategies. I'm not a public mining analyst. I'm barely an armchair equities guy. So that's about all I can say as far as valuations. But I like to see this. Let's get some of the AI money and some of the crypto money, blend it together, and to go deploy it.
It's exactly what we were talking about last section with Riot, and we have this energy model, and now there's this HPC AI, which obviously ties into energy. The reason that CoreWeave is interested in this is because Core Scientific has, I believe, well over 500 megawatts in capacity, and a lot of that capacity has not been built into. I've been to some of these sites, the Core Scientific sites, and they've been empty for a while because the bankruptcy process takes a while. And yes, these things need to be retrofitted. $300 million retrofit is not a small bill. But if you're looking at NVIDIA stock price or any of these other AI related companies, they're all going up and to the right. Maybe a bubble, but when it comes down to it, people pay for energy in dollars, and Core Scientific is on the right side of this deal. So very excited for Core Scientific. Very cool to see that Adam over there was able to turn this company around. I mean, he stepped in at a really dark point for the company and set this correct. I do remember a year ago us going through some of these conversations. There was like the Celsius and Core Scientific deal that they're trying to figure out when they're selling those assets. Core Scientific had a bunch of other hosting related things that they're trying to sell off, and it looked bad, but they piecemeal took care of every single issue, and they're looking really strong at this point.
Need ASIC help? Check out Vitamine, one of Bitmain's certified repair shops located in Washington State with satellite offices in Colorado, Oklahoma, and Texas. PSUs, hashboards, immersion setups, in and out of warranty repair, Vitamine has you covered. Want to train your technicians? Bring Vitamine to your site for hands-on training in the art of ASIC repair, complete with Bitmain AMTC certification. Contact Vitamine today at dan@vmasic.com. Again, that's dan@vmasic.com. When you think of ASIC repair, think Vitamine.
Okay, I think you are on the docket for the next story, which involves BitDeer and an interestingly named ASIC miner called
Desiweminer.
Desiweminer.
So Desiweminer and BitDeer. So BitDeer went public, was it last year, 2 years ago? I forget.
About a year ago.
So Jihan Wu, Bitmain co-founder, leads BitDeer now. He is expanding his footprint in the United States. And we talk about different publicly traded miners pursuing highly differentiated strategies. Well, one of the kind of big questions is which of these public miners are really going to vertically integrate on the ASIC production game? So we see BitDeer make a huge step. They recently, I don't think coincidentally, raised $100 million from Tether, wants to deploy that into Bitcoin mining. They recently, and then they turned around and quickly bought, entered into a share purchase agreement with Desiweminer, the company being Free Chain. Desiwe is an ASIC miner fabrication, and then BitDeer wants to combine its ASIC chip fabrication with this business. So one of the takeaways is that BitDeer clearly believes Desiwe is a real material company which can achieve operational and production excellence, which has kind of been a bit of a meme in Bitcoin land for forever. It's really just Bitmain. And the thing is, if it's Jihan Wu who co-founded Bitmain, and he really, there's literally no one else on earth who knows more about building an ASIC and evaluating these things, it's going to be Jihan Wu. So for him to not just implicitly, but explicitly say, this is a valuable operation, this to me indicates we now have another entrant into the ASIC fabrication business. So welcome Desiwe into the Mount Rushmore. Welcome. No longer are we a duopoly or triopoly, where there's now multiple ASIC manufacturers. I think there's a couple other points, like they believe that BitDeer's chips are ideally suited for advanced semiconductor processes at 4 nanometer and below. That's significant. That's a very small nanometer chip. And they have a pretty good efficiency on the equipment, 20 joules per terahash. So, yeah, excited to see where this goes. Jihan and Bitmain or just the Chinese conglomerate making moves here in the US. So you like to see it. I hope it works out for them. I don't see
It's
why
definitely heating up.
Yeah, it's heating up.
So we got a little video here if you're listening to the podcast on the video version. We're just showing some shots of the miner, and it's the same as most ASICs, right? This shoebox model that's been popularized by the S17 and forward models. That's probably never going to really change at this point, besides maybe micro BT or maybe like a block square comes out with a different design, but it seems to be everyone's focusing around this design now. So we got some shots of that. That's cool. I think from an ASIC perspective, the thing that I'm looking for is BitDeer wants to compete with Bitmain on this side of the industry. Obviously, there was that split many years ago at this point, but BitDeer went and focused on self-mining, and they've been working on that ASIC model for a little bit. I think they need a little help to be able to get back into action. That Tether money definitely helps. $100 million for shares within BitDeer itself. And now they've been able to go out and swap shares for Desiweminer. And they're going to compete against them at a time when Square, Auradine, Bitmain, MicroBT, Canaan, a few other companies out there are trying to maintain or grapple with market share. The one show I will push people towards, and that'll be coming out next Tuesday, is with Earl May of Epic Blockchain. We had him on the show at Consensus 2024. We did a live podcast with him there, but we'll be putting out on the Tuesday show. And we really get into like the differences between these different manufacturers, why Bitmain has a lead versus everybody else, what the convergence is going to look like for these ASICs, how people are going to make money off of them. So we look forward to that show. Are you headed to Mining Disrupt? If you are, check out the second annual Print Crypto Poker Tournament hosted by the Satoshi Action Fund. Puff cigars, enjoy drinks, and play poker with everyone in the Bitcoin mining community Tuesday, June 25th from 8:30 until midnight. Teams from Foreman to Ocean to Swan will be in attendance. You don't want to miss it. You can find a link in the show notes below.
This is a really dense week for news, so I'm going to let you take this. This is a bit of a more complex story.
This is listeners need to bear with us on this one. So do you remember the Cleanspark story from a few weeks ago where they announced the purchase of this Wyoming site? They put out a great video. Everyone's super excited for Cleanspark to go into Wyoming. They've mostly been in the south of the US and Georgia and Mississippi, and they're venturing into the second great square state, Colorado being the first, Wyoming. Then there was an executive order, and it was around a Bitcoin miner in Wyoming, and people thought, is this the Cleanspark site that Cleanspark announced a purchase order from? Turns out it was. And Cleanspark was trying to figure out, okay, what do we do with this situation? Because we purchased this site for $18 million, 75 megawatt site. But now the Biden administration not only wants the original company to divest, but also to strip bare to the ground the entire site. So like a lot of the infrastructure you purchased had to be destroyed. And to go around that, it's like, okay, how much legal bills are we willing to pay on top of buying the site? And we're kind of like waiting for news from what Cleanspark is going to do with this. Fast forward to today's headline. This is from our friends over at the Miner Mag. Quote, Bison seeks to freeze Mine One's proceeds from Wyoming sales. Subheader, Bison added Bitmain as an additional defendant last year in the case against Mine One. We get into this article from the Miner Mag, and you can see the site in Wyoming. Typical hash hut design. Looks really cold. You can see like I-25 or I-70 there with the semi-trucks on it in the middle of winter. And this article does an amazing job of kind of walking through what happened here. But essentially, there was two operators at the site, Mine One and Bison, and they were working together as a JV. At some point, it seems that Mine One started taking over the site a little bit more aggressively. Bison wasn't able to work with Mine One the capacity they wanted. Bitmain started getting involved with Mine One, so Mine One seemed to have like a little more leverage because they had some contracts there. Now, Bison is coming back and saying that, hey, Mine One owes us this money. And Mine One just sent that money to Cleanspark for the site. And Bison wants that money. So they're trying to put a hold on that money being sent to Cleanspark. At the same time, I think everyone's wondering, like, is Cleanspark going to proceed with the sale? Like, is this in the closing stages right now? So I think if you're really interested in this, go read this article on the Miner Mag. Let us know what you think about it. I think this one's going to take some time to unravel, which is unfortunate because there's still a lot of hash rate to be deployed. For Cleanspark, I think the question is, like, are they going to be able to get the site going and deploy hash rate? They definitely have like a lot of ASICs to deploy in the future. Or are they going to look somewhere else? Is the cash going to be caught up in this? Is a new buyer going to come in here? Can Mine One and Bison resolve this? A lot of different questions for this story in particular. I'll leave it there, Charlie. Any thoughts?
Shout out to the Miner Mag to make sense of this. This is kind of a hard one to follow. And it sounds like you have a bunch of different parties who are pissed at each other. So it's hard to get all the info. I think the main thing that I'm just unclear about is why exactly did the Biden administration pull the executive order? Like, is that, I know there's stated reason, but is that common or is there something else going on here?
Well, that was from the New York Times article, right? Where we covered this. We covered this whole story on the Mining Pod. It's just, there's been a lot of new names revealed over time. Miner Mag has done a great job kind of keeping track of it. But the original story was that Microsoft talked to the Department of Defense and said, hey, there's this Chinese-owned Bitcoin mining site really near a nuclear base in Wyoming. Conveniently, seemed like it was near a Microsoft site. They might have wanted the energy, hard to tell. Department of Defense kind of ran it up the flagpole, talked to the White House about it. New York Times put this article out as well. At the same time, I think Microsoft had a hand in talking to New York Times. One of like 5 New York Times articles about Bitcoin mining this year. And of course, all of them have been extremely negative. That went out, and pretty quickly, Biden administration put out this executive order to force the sale of the site from the Chinese national owners. And then within that, they also said they had to strip bare all the electrical infrastructure, just like tear everything out, like turn it back to earth. And that happened basically when this was changing hands. And I think a lot of people would thought, hey, let's just divest the ownership group and change names. But it went further than that. And I think that probably caught Cleanspark by surprise. I can't speak for them, but I would suppose that would catch me by surprise. Like, had to tear, electrical equipment out of the ground. So I'm sure they're trying to figure that out. And then in the meantime, you have a JV that seemingly went wrong, and people are suing each other on the backside of it.
So many dimensions here. It's like,
it's such a classic Bitcoin mining story.
Oh God. You see this kind of stuff in oil and gas and these emerging markets where it's just chaotic. And what's interesting is we saw a similar deal in Arkansas where the state of Arkansas basically kind of nuked, really targeted what appeared to be the whole industry, but I think it was mainly due to concerns over Chinese foreign direct investment. But it's interesting that we're seeing this a lot. It's been years now since the Chinese hash rate exodus. I wonder where you've got so many different dimensions to take this, but I'm curious what the future of Chinese foreign direct investment in the United States looks like. I'm curious about partnership disputes, and I'm really curious how how this past year of like public miner acquiring private miner story is going to unfold. We'll see how this goes.
It feels like a very bullish summer. I was expecting quiet. Yeah, I think my mental model is around 2021, where we saw mining stocks, where we saw the entire industry honestly jump to highs, kind of a quiet summer. Bitcoin dropped quite a bit, and then it came roaring back in the fall. And that's how I thought about it. But Bitcoin clipped over 70. I don't know if it's still over 70 as of recording right now. Mining stocks are looking really strong. Industry is just looking prime for something else. And a few weeks ago, we were talking about how boring it is. So it just tells you how fast things can change. We will close out there. A few little plugs. First, Charlie, tell us about Bitcoin Season 2 and where people can find it.
Yeah, hit up Bitcoin Season 2. Maybe you're a Bitcoin miner, but you want to hear about the cultural and technical side of Bitcoin. We cover that. New faces, new voices, new topics on Bitcoin. Bitcoin Season 2 everywhere. It streams Spotify, Apple Podcasts, and under the Blockspace YouTube. And we will be doing events this summer. We'll find you in Nashville, following up on that soon.
Yeah, more news for our Nashville events. We're looking forward to that. If you're enjoying the show, hit us up. We're hello@blockspace.media. We'd love to hear more from you, whether it's questions, criticisms, or comments. We take it all. We'll see you next week for our Tuesday episode, and then we'll probably be doing a lot more interviews through July and June and into through June and then into July. Struggling with my words as we close the pod here. Thanks for listening. We'll see you next week.